Growth investing can be a really exciting strategy to use with your investments. Think high risk, high reward. However, there are some considerations that you should take into account before you get started with growth investing. So in this video, we are going to explain exactly what growth investing is and how to get started. Hey guys, it's Justine with the College Investor, Investing and Personal Finance for Millennials. So today we are talking about growth investing. What exactly is growth investing? So growth investing looks at companies whose stocks are expected to rise faster and above their competition. And you'll want to consider a couple of different things and take a look at a couple different factors in order to figure out whether or not that company's stock is on the fast track for growth investment. You'll want to take a look at things like long-term increases in stock price, dividend payouts, any business expansion plans, so that goes along the lines with that growth factor. And other things to look at are things like sales, proprietary processes, any patents, and their customer base. Just really looking at those trend lines within that particular company to see how that aligns with your growth investment strategy. So you might be asking yourself, what's the difference between growth investing and value investing? Growth investing really looks at stocks that are on the rise, whereas value investing is looking at stocks where the market has undervalued. So you're looking at kind of two different pieces right there. The one thing about growth investments, however, is that they can come from a variety of different industries. However, you'll want to pay attention to different sectors like technology, healthcare, small companies, and speculative opportunities. Now, there's different ways to evaluate a potential growth stocks. However, there's no universal formula. There's not like a formula that you can just plug in and figure out which ones are which. But there are a few things that you'll want to take a look at when you are on the hunt for good growth investment stocks. You'll want to consider quantitative and qualitative measures, including things like projected earnings growth, historic earning increases, profit margins, return on equity, and then the price to earnings ratio. So should you consider doing a growth investment strategy? And it really depends on your investing objectives. Is this just an experiment that you want to do on the side? Or are you really banking on this strategy to use for your retirement account? And keep in mind, when you are doing growth investing and looking at these types of stocks, you are only investing in a single company. Whereas if you were to invest in mutual funds or index funds, you're spreading out your investment across a variety of companies, which can help lower your risk. But you can also find good growth mutual funds or good growth index funds as well and kind of get that strategy, but using it across different companies. Also, this is a high risk, high reward game. So if you are willing to put in the research and looking at particular companies that fit this mold, then it could pay off for you. But remember, this is a long-term game. Don't expect overnight riches by using this strategy. Now, obviously, there are a ton of different investment strategies to consider when it comes to building wealth. And if you are just getting started with building out your investment portfolio, we have a bunch of free tools and resources for you to use using our investing tab at thecollegeinvestor.com.